Boom, what is up, Waves Capital? It's Royce Jacob. Welcome back to the channel and welcome to another edition of Trader Tips. In this video, we are going to be talking about why put options are a swing trader's best friend during a bear market and why they're really the only way that we can make meaningful returns as swing traders during times of macroeconomic uncertainty, like right now. Okay, so I know these statements seem very obvious to the initiated. If you think the market's going to go down, buy some put options and short it, and this is correct. But the reason I really wanted to make this video was for those who may not be as aware of put options and maybe have heard of them, but don't know how to do it. So over the course of this video, and I know you've already seen it, I do have Robinhood mirrored on the screen for you guys, and I will talk more about this as we dive into it. But I do want to talk to you guys about a few of the put options that have been working for me and us over at Waves Capital over the course of the past month, how we were able to close the month of September well in the green with a meaningful amount of profits while it seemed like everyone else was losing money, 401ks are melting to the ground. And yeah, just want to let you guys know that there's always a bull market somewhere, even if that bull market requires you to short a bear market. Okay, so over the course of this video, we will be taking a look at Robinhood once again. After we do that, talk about the put options, talk about some specifics. I'll show you guys quickly how to buy put options on Robinhood and also why I no longer use Robinhood as my primary trading platform. Get into that as well. But after we close out Robinhood, I do want to jump into one of my recent newsletters and talk to you guys about how I plan on attacking what I feel like are the last innings of this bear market and really constructing my portfolio in a way that favors the longer term on some revolutionary growth stocks that we know and love here on the channel. Okay? Because again, ultimately, it's not as fun to be a bear as it is a bull, but our jobs as traders are to optimize gains no matter the situation, provide for ourselves, provide for our families. And you know what? During a bear market, you got to do what you got to do. Okay? You got to be a shark. All right? So let's kick off the video by diving right into what I know all of you guys want to see. I will expand Robinhood again, go over why I no longer use this as my primary brokerage, but again, really focus on the put options, and then we'll dive into the back and talk newsletter. All right, so get this nice and big and put myself up in the maybe just a little more centered here, and let's dive into this. Okay, so first off, you guys, if you have seen my videos, how I made X in this amount of time, really kind of a lot of the videos I posted a couple years back that really propelled my channel during the most manic period the stock market has arguably ever seen. Crazy times. In retrospect, very unrealistic times, right? And those days are over for a few reasons. I will not be posting videos like the journey to $1 million, like when my account was at like what, 800,000 a couple of years ago. Those days are gone and they're not coming back. The first reason for that being, at least on Robinhood, the first reason for that being, now I'm at a point in my trading career where I pretty much, if my accounts ever reach over 250K in investable assets, I just wipe it. So I no longer trade any amounts across my portfolios above $250,000. Okay, anything above 250K, I just clean off the top and I take any profits above that number. All right, so that's I've capped out my investment my total investable capital. Okay, and second, as I alluded to earlier, Robinhood is no longer my primary brokerage app. My primary brokerage app for both options and the longer term investments is now TD Ameritrade. The primary reason for that is just because Robinhood, as far as a public company goes, and their health from a long-term perspective, I do believe in Robinhood, which is of course why I still hold a fairly meaningful amount of capital in here. I will say that the split is roughly 10 to 15, maybe on the high end 20%. Top 20% though, of my total investable capital or total tradable capital, I should say, I keep in Robinhood. And the other, 80, 90% I typically keep in TD Ameritrade. And of course I have some crypto accounts as well. But that's aside from equities. So Robinhood, I love the app. I'll always continue to use the app. And it's just way easier to look at. The user interface is a lot more beautiful. It's more appealing to the eye. And I genuinely enjoy using Robinhood. So I'm going to continue to do that, but I just wanted to let you guys know that is why. I mean, obviously, I think we've all lost a lot of money since those peaks in 2021. But I mean, I just want to let you guys know why this is not as impressive as it was in the past, but I feel like everyone can relate to that. Anyway, let's talk about put options. Okay, so before we dive into a couple of puts, which I want to share with you today, the first is a Tesla put and a SPY put, and sandwiched in between those are some Matterport calls that will definitely be expiring worthless, but that's perfectly fine. That's, I mean, I've already bitten that bullet at this point, but we're going to be focusing on what has provided us many returns and us over Waves Capital. Please let me know down below in the comments below if you got in these trades with us when we initially established them a couple of weeks ago. Because since then, since initially establishing these positions, again, they've provided us some very meaningful returns, and Waves Cap came out very, very profitable in the month of September. That was very, very bloody for most. Okay, so before we dive into the Tesla put and the SPY put, we'll just focus on the SPY put. All right, and we'll look at the Tesla put too. Why not? I actually do have a video that I want to talk about with Tesla, their little robot, and some delivery numbers, but I'll record that afterwards. What is a put option? A put option is the opposite of a call option, and it is an options contract which allows you to bet on stocks going down. Okay, so there are options contracts that allow you to profit if a stock goes down. Call options mean you think a stock's going up, you profit if the stock goes up in value. Put options, or shorting, is when you think a stock's going to go down, you buy put option and you can profit if the stock goes down. Okay, so Tesla, let's take a look at this. Tesla 1021. So 1021 means that this options contract expires on October 21st. And this means that I think Tesla is going to go down to a price of $230 by October 21st. So the date of recording is October 2nd. Okay, so since we have established these put options, these puts have, and I do cycle in and out of positions. Sometimes I do sell and rebuy. So I don't think this is the total return on this, but total return as far as this exact position is concerned is 77%. So 77% for options is pretty solid. It's not like 500,000, 10,000%. Like, again, we've seen in the past some crazy percentage returns. But once again, for a bear market where most people are losing money, where 401ks are melting, this is a very, very meaningful amount of money. And on top of that, again, a reason why it's even more validating to make money during a bear market is typically because when the stock market's going down, Bitcoin's going down, gold, silver, it's like assets decline in value, the US dollar appreciates in value. Okay, base of macro right there, the golden rule of macro. If the dollar is up, it's likely that the markets overall are losing strength. So if you're making money during a bear market when the stock market is selling off, the dollar is stronger and your dollars are literally worth more when you make money in a bear market. So profits during a bear market are far more meaningful. So always remember that as well, which is why it is kind of evil in a way to like making money during a bear market. But again, that's our job as traders, right? Is to optimize gains regardless of the market environment and sometimes the morals involved. Again, shorting, not fun. It's a necessary evil. That's how I view it. Okay, so Tesla put is doing well. Again, 1021 is the expiration date. I do think Tesla will get down to 230 by 1021. And again, you guys, I'm not going into crazy detail here because it's pretty self-explanatory, but SPY put. So same thing. SPY, 1021 expiration. You can see expiration date, 1021. I purchased these on 9/23. And since then, a lot of profits have been taken on up days, but I guess since then, as far as this position is concerned, I do have a 19% return. So that's not that great. Again, I have reduced this position pretty significantly since initially establishing it. I believe I started out with, how many puts do I have now? I have 5 puts. I believe I had at least 20 when I initially established the position. So profits have been taken. Again, in this market, it's always very, very important to not only reinvest capital, which is what we'll talk about right after this, into longer term plays that you're actually bullish on, but transfer some to your bank. If you're making money shorting stocks, always put at least 20 to 30% of the profits made into your bank account. Okay, lock in the win. So SPY 360. I do think the SPY will get down to, the SPY is below 360 at the time of recording, so we're very correct about that. Still have a few weeks left, so we'll see how the next few weeks unfold. And I guess we'll call it there, you guys. Again, the primary point of this video was to show you that put options exist, and it's very easy to buy put options. So Tesla, perfect example. If you want to buy put option on Robinhood, you hit the little trade button in the lower right hand corner. You can see that trade options. I think it's going down. That's why Robinhood is nice. Like, I think it's going up. I think it's going down. Call option, put option, right? Put option, think it's going down October 21st. It'll take you to all the separate contracts with separate. These are going to be all the same expiration date, but separate strike prices, which is the price at which you think Tesla will be. This is a pretty risky. I will admit this is a risky call option even for me. This is a risky put option even for myself. Let's go down to 230. So in order for me to break even on this, Tesla would have to go down 15-16%. Now there are reasons, once again, the Tesla bot and the delivery numbers that were just released. You can't see those, sorry, but we'll be making a video on that as well. That I do think that's possible for Tesla. Okay, so again, this is risky. I always recommend buying options, whether they're calls or puts, at least 45 to 60 days out. These are risky. Again, these are only expiring in a couple weeks, like less than 3 weeks now. So these are objectively risky. And it's important to realize the closer the expiration date, the higher risk these options are. Okay, so what's the smart thing to do when you're purchasing an options contract? That is still, options are risky, guys. You can lose everything. That's always important to remember. But my personal rule, and I made videos about this in the past, is 45 to 60 days out in terms of the expiration date on the options contract you purchase. Once again, whether it's a call option or a put option, and plus or minus 25 to 30%, plus 30%, plus 25, 30% if it's a call option, obviously minus 25, 30% if it's a put option. Okay, so that is typically how I structure my options. But right now, I'm pretty confident in a more short-term downside, and that is why I'm capitalizing. But as I said in the beginning of this video, so again, we'll just close this out, you guys. Again, made $1,600 on Friday as the markets closed out a pretty bloody week, and the month of September as well. And just in the past week, made just under $7,500 in, again, the Robinhood account, which is probably around 15% of my total tradable assets at this moment in time. Okay, so that's Robinhood, you guys. I think we can close that out. So let's just cut this guy. Boop. We can close that out right there. Good old Reflector app. If you guys ever want to reflect your phone, use Reflector 4. It's a great app. But let's move in to what I'm doing with the profits from this capital. Again, aside from putting some away in the bank account, locking in those profits, what I'm doing with these profits moving forward, because I do think, as I mentioned in the beginning, we're in the final innings of this overall correction. Again, I do think the majority of macro headwinds have been priced in. There's always the potential for a black swan, which would make these puts absolutely rip, of course. But I think for the most part, the S&P 500 is 5, maybe 10 max % away from the bottom, where it'll probably go sideways for a while, take a long time to come back. But that is usually when I will sell puts, because it's very, very important to understand that put options do not trade, and call options don't necessarily trade on volatility, like just volatility or just direction. Call options, put options, options contracts in general trade off of perceived volatility, okay? You got to play the psychological aspect of it. You got to play the game theory, okay? When there's fear, when there's emotion in the markets, options contracts are going to perform at their best, okay? If a stock is just going down 0.5%, there's days where like a stock can be down 1% and a put option can be down 10%, okay? So it doesn't necessarily matter on just direction itself and just movement itself. It's perceived volatility and how much people think the stock will go down in the future, okay? So just keep that in mind. What I want to close it out with is reading the newsletter. But before we do that, you guys, if you want to know how I'm trading on a day-to-day basis, if you want to join Waves Capital for real, then hit up the first link down in the description box below, okay? Step up your trading game. You can always unsubscribe. That's important to remember. But join Waves Capital for real. When you sign up, these are all the pricing plans you choose. Again, you can always unsubscribe. You can even try for free if you want. Unsubscribe after that. But I trust you'll be sticking around. With this, you will receive a complete breakdown of my entire personal portfolio, which is all my options, stocks, and cryptocurrency positions. The portfolio is updated every single trading day during market hours, and you'll receive the trade alert and price targets newsletters I write every morning shortly afterwards, which explain my thoughts and rationale. So why I'm doing what I'm doing, and of course some real-time price targets and charts for you guys as well. So again, if you want to step up your trading game, if you want to learn, not copy, again, I'd never advise you to copy, but if you want to learn from my successes, from my failures, and really learn how we over at Waves Capital were able to close out the month of September with a big win, honestly. First link down below. Once again, choose from any of these, completely up to you. But appreciate it if you check it out. If not, you're lost. No worries at all. Okay, so we established our macro thesis based upon our extensive due diligence. This is from my Trade Alert newsletter, obviously on September 29th. So we established our macro thesis based upon our extensive due diligence. We loaded up with the most ideal put options for the job, and now we reap the fruits of our labor. Short the market, let it crumble, then use the profits to reinforce our longer-term call positions. This is exactly what we've been doing, and this is what we'll continue to do. Our game plan couldn't be going more accordingly. Okay, so and again, you guys, you saw with those SPY puts that were honestly kind of disappointing. I don't know what happened on that return metric that we just looked at, but it has to be because I took a bunch of profits and that skewed it. But anyway, we established those positions quite a while ago, a few weeks ago already. And obviously since then, as you know, the markets have crumbled. So over the course, again, and I told you I started with at least 20 of those puts. We started with a lot of puts. And over the course of the markets selling off, again, even though I think the markets are going to go lower, it's always wise to take profits and reallocate over the course of the overall trade, which is me thinking more downside is to come, in order to play the volatility, because it's rare anything goes straight down or straight up. There's always going to be volatility in between, okay? Especially when you're playing like 1 month out, 2 months out. So take some profits along the way, reinvest those into positions you love for the longer term that you are bullish on, and they can bounce back over the coming months, which is what we've been doing. And again, that has been going very accordingly. Anybody can make money in a bull market, but it takes skill and discipline to make money in a bear market. I know most of you have managed to find success in this challenging environment, and I commend you for it. September was difficult for most, but we navigated these bloody waters accordingly. I'm both proud and thankful to say that Waves Capital is heading into the new month on a strong foot, and I'm pumped for the seasons ahead of us. Cheers to the day, and cheers to the future. We'll just call it right there, Waves Cap. If you are part of Waves Cap and you have won the month of September and you look forward to winning the month of October, let me know in the comments down below. And if you want to join, you guys know where to go. So we'll call it there, you guys. Until next time, always remember, take action, make waves. Peace.